Hi guys, welcome to the webinar. This is day 2 of the live session over the shoulder training session. We had a massive turnout yesterday, expect the same today. So for that reason, I usually do a roll call and mention each and every one of you, but I would take most of the hour doing that. So I really want to welcome you. Dennis says, thank you very much for doing these sessions. You're welcome, Dennis. It's been fantastic. The outpouring of support has been great. So I'm going to give this about 5 minutes or so, get everybody a chance to get settled. So if you need to get up and stretch, get a cup of coffee or what have you, go ahead and do that, and then we'll get started. So a lot of you said thanks for the session yesterday, Sharia. Yes, so my pleasure. So I'm going to give this a couple minutes. Let everybody get a chance to get situated. So, give this another 2-3 minutes. You're welcome, Mustafa. No worries. So welcome to the webinar. I'll be starting in just a few minutes. In the meantime, go ahead and put your name and where you're from in the question box. I always love to see where people are from. So we have people from Belgium and Malta and Canada and California and Netherlands and all over the place. Sydney, Australia, Copenhagen, Denmark. So just fantastic outpouring of global participation here. So obviously want to first wish that all of you guys are safe in your respective locations around the world. I suspect we've got another couple of tough months to get through this and hopefully get to see the other side of it, not into the not too far distant future. Chalapathy says, is this about stock trading or futures? So I look at all trading instruments. I was a stockbroker. I was a commodities futures broker for many years. And I look at, all trading instruments really under the same microscope. I look at everything from the viewpoint of price action, price patterns. And as I, kind of went into it yesterday, this is divorced or different from fundamental trading, where fundamental traders would look at, fundamental information related to anything they were trading. So a stock trader would look at price earnings or inventory turnover or management. Commodity futures would look at, export import ratios. And so I look at none of that. To me, all the information is in the price of a market. The market, to my mind, is a discounting effect. And I'll show you how I anticipated that the U.S. dollar was going to turn in March, despite the fact that it was making an all-time new high. And there was no insight other than that, than the long-term charts that I'll share with you in just a moment. So I'll give this another minute or so. Dale says, this may be a bit dumb, but can you go through a reversal bar on a blown up chart? So nothing is dumb. No question is, everybody thinks, well, if I ask this, I won't sound intelligent or this or that. Meantime, everybody has the same question on their mind. So there are no dumb questions. As I tell my young son, in life, you just have to keep asking questions. Never sit in the back of the class and just be stymied and, let things just roll over you. You have to ask questions. And so smart people ask questions. There are no dumb questions. So Dell, I'll try and get into that in this presentation. So Mark says, I think stock prices are being driven by the size of the next stimulus check. They probably are, but some stocks are going to go up and some are going to go down. I see a ton that are looking like they're poised to go down. I'll talk about a few today. And yes, I think the stock market's floating on a sea of liquidity and it'll keep rising higher. And so to me, it's not a stock market, it's a market of stocks. Some are going to go up, some are going to go down. And then, how do you decide which ride to get aboard? And to my mind, I just look at the price action. All right, I think that should, we're close to 300 attendees. We had over 700 last night, so we'll expect that. So fantastic. So welcome again to day 2 of this 4-day live trade execution training sessions. My name again is Mark Shawson, the Pattern Trader. I just want to mention these 4 days, we started at 5 p.m. Eastern Standard Time. I need to go and see a doctor tomorrow, so I'm going to have to postpone tomorrow's session till 7 p.m. Eastern Standard Time. We'll send out an email to that effect, so it'll be 2 hours later than today's start date. I'm looking at a surgery next week, which I'm pretty anxious about, and I have to go for some pre-screening and whatnot, so I couldn't change the appointment, so that's just the way it is. So I hope you guys can understand that. There will be recordings of these sessions. If you can't make it, we will make it available to you. So 7 p.m. tomorrow. So that's the first bit of housekeeping. Second thing I want to share with you is an email that just came through today. My objective when I started the Pattern Trader. So this is not a signal service. This is not a managed account service. I don't open up accounts, put in trades, and then you see how you made or lost. The whole objective of starting the Pattern Trader was, in the hope and the thought that I could share, many decades of staring in front of the screen. And I think I've learned a few things along the way. And I wanted to share that with you in the hopes that you could make your own independent decisions, that you're not incumbent upon me or anybody else. You don't have to listen to chat rooms or, talking heads on financial shows or analysts or whomever, that you could become the boss of your own, trading and your own destiny. To my mind, that's the highest, order that we can seek, where you're not, dependent on anybody else but your own thought process. And so it's the tools that I seek to impart at the Pattern Trader, and the educational tools to, with the sole objective of, making you guys independently able to make decisions on yourself. And so to that end, when I get emails like I did from Prashant, it really confirms, that maybe I'm on the right track. So Prashant sent me an email a few weeks ago. I read it out on one of my videos. I'll read it out again. It says, I don't imagine you get a lot of emails from former master pattern traders. So a master pattern trader is a program that we offer each Friday. It's a live session where I go into the markets live and, go through all my analysis, how I, look at opportunities like I'm doing in these sessions, and then take questions. So we do that every Friday in the Master Pattern Trader group. So Prashant says, I joined your program 2 years ago and left early last year to trade independently. My goal when I joined the program was to educate myself on technical analysis and risk management. I believe learning a skill is much more important than the hot tips. So, there's Prashant, is right on the money. He says, I started off with a $20,000 account and began trading using all of your learnings. There were ups and downs along the way, but eventually I hit a couple of home runs in silver in several other stocks. My account is now 80,000, so up fourfold from where he started with 20,000. So a fourfold increase in a year, and I can sleep at night. I was very inspired by your personal story and how you turned 19,000 to several $1,000,000. I don't know how to thank you for the knowledge and inspiration. I still regularly follow your videos and learn and validate my analysis. I would love to meet you in person someday if I get a chance. Thanks and best wishes to your family. And so that was a few weeks ago. And then Prashant just followed up. I guess he put a comment on one of my videos recently. And this was Prashant again. Thank you, Mark. I'm glad I stumbled upon you in 2016 as I was sifting through videos trying to figure out how in the world anyone can make money in the markets. I've been trading for over 10 years and have never had success keeping the money I made. I did not give up and was very determined to figure this out. I read books, saw videos, and when I saw your video for the first time, I immediately realized this is just not some yet another market guru. There's logic to what you're saying and that you actually make sense. Thanks again for educating everybody. I'm very grateful for what you have taught me. For anyone reading this, I would highly recommend the Master Pattern Trader program. The money spent on that will look like small change once you learn the skills. So, this is kind of the gratitude that, I did not expect when I started the Pattern Trader. I, had no clue as to, what I was jumping into. And what I learned was that, I was actually inheriting a second family like Prashant, and many of you who've written similar stories and testimonials, and, want to thank you all for that. So yesterday I was talking about a little bit about the US dollar and how right at this time I was warning or alerting our members that if they were chasing this rally, you were running into the knife even harder. And I dug up one of the emails right around that time frame that alluded to what I was saying. So this was Sunday, March 29th. This was my email to all of our members around the world. And it was obviously at the height when the pandemic just started. And when it did, everybody kind of sold out of their assets and ran into the US dollar for cover. And I kind of, went on an expanded kind of rant, on how the dollar index incurred its biggest weekly gain since the 2008 financial crisis, with the dollar surging as investors scramble for the world's most liquid currency amidst crashing stock and debt markets. However, in last week's weekly video report, I cautioned against chasing the massive dollar rally. It is my experience when volatility expands, as it dramatically did in the US dollar index, it is usually an indication of a turn or reversal in the market. Turned out that week was the turn in the dollar. And I said it, I said last week was a reality check for those chasing the last gasp of a dollar rally. So I was already looking for a turn right in, middle of March. I went on to say, based on the 45-year US dollar index chart, the reversal of the 10-year dollar rally is right now. For the last several weeks, I've been alerting that the US dollar is trading at a major long-term resistance, and again, was really warning our members that the dollar was about to turn. I said, based on that belief, I was able to catch the turn very early in euro, and I went long in pound US, euro US. I said early last week, I sent out alerts on our elite program. I told you a little bit about our elite program, our daily alert service, alerting our members to major turns and buying opportunities in euro versus US dollar, which at that time the euro was like 106, now it's at 122. The pound was around 121, now it's 136, and selling the dollar yen about 108, and now it's about 103. So, we were holding on, in excess gains of 700 pips in these various things, and they only went on to, make many, many more. I said over the last month, I estimate our elite members have gained over 5,000 pips in various trades over this period. I talked about the dollar yen being in a major long-term downtrend. I spoke about that yesterday. I said dollar yen closed down 300 pips at about 107.95 and is headed much lower. So remember, this was in late March. Today we're sitting at 103 dollar yen. and talked about gold and silver rallying over time, etc. So I'm just it's kind of interesting to look back at what you said. And so this was the chart that I was looking at. So despite the fact that you can see that we have this 10-year rally from 2010 to 2020, once it kind of, culminated or peaked in March, I was looking at this double top right along this resistance line and speculating that that was going to be the top and that we would turn lower. And, said as much to all of our members at that time. And if you followed me, you made a fortune as all of these. So you can see this is what the dollar index looked like. I'll take a look at it in just a moment. This was right at the peak, and in my chart right at the top, I said the collapse and lack of follow through feels like a bear trap in the US dollar index, and which is likely to head much lower from current levels. And as we'll see, it is much lower 9-10 months later. This was the dollar yen chart, which I said is destined to just go much lower based on the long-term trajectory. And I looked at some other things. At that time, I was looking at shorting the dollar yen at 107.5, and that's what that email looked like. So right now, this is what the dollar index looks like. So it's easy to have some revisionist form of history and go back and say this is what I would have done, this is what it looked like, but I just wanted to show you that's what I was saying right at the height of the dollar rally. And as I said, what I try and alert our members to are not only opportunities but also where the traps and the pitfalls are. So right here in March, this is where everybody was running into the dollar, and I was saying I would not do as much. In fact, I'm looking for it to go the other way, and you can see 10 months later, this is what has transpired. So, again, I didn't have any special insight other than looking at that 45-year chart. And to me, this is why I look at price over information, because price is the information. Price is the news. Price is ahead of the news. So how up here did the dollar, anticipate that, it was going to be down here? I mean, there was nothing in the news that you would have read at that time that would have, informed you of that kind of collapse. But it was just the price, where you saw substantial resistance right here, where you saw a combination of that double top. Then you had what I call a bear trap, or a bull trap rather, where all the bulls who chased this rally got trapped up here, and then it turned. So you had a double top, you had a bull trap that was sprung, and now more recently you have this head and shoulders, which is a very bearish price pattern. It looks just like a man or woman's. Let me just expand this a little bit. So that looks like the left shoulder, the peak, and then the right shoulder. So it looks like a man or woman's head and shoulders. And then we have this neckline that is a drooping neckline, as opposed to a vertical neckline, or a horizontal rather. This is a drooping because the right shoulder is sitting below the left shoulder. So it creates this downward slanting neckline. And by virtue of this downward slanting thing, I can then posit that, we're going to have a collapse in the US dollar out of this head and shoulders. Now, we are at the support line. I discussed this yesterday, where, we're kind of playing along an area, and, we may still have a little bit to go before we hit the real level of support here. But we could have, flurries back and forth. But once you understand what the game is, once you understand what I call the governing price pattern. So this price pattern is likely, in my mind, to govern or dictate prices in the US dollar for the next couple of days, weeks, months, and possibly years following, the confirmation of this double top head and shoulders price pattern. So once we kind of have this in our rearview mirror, we can well anticipate that if we get a rally here, that we should just be licking our chops to take this thing short. So you shouldn't be dumbfounded and think that this is just momentum and get carried away and think I've just got to get long whatever momentum is showing me. So to my mind, the first thing I do is I look at the trend or a pattern. So there's, kind of 4 steps to, my process where, I kind of look at the trend. Geez, I can't even write anymore. Certainly with this, a trend, or a chart pattern that then informs me in what direction I should be faced in, right? Sorry about this. This is terrible. So before this, you had a 10-year uptrend. And you can't see it on this time frame, but going all the way to 2010, the dollar has been in a huge uptrend. But that uptrend was, a kind of a counter trend rally, because the dominant trend was actually, lower by virtue of this 45-year chart that I showed you here. So if we go back to this 45-year chart, you can see that, the rally here. So let me just capture this real quick. Kind of assume that everybody knows what I'm talking about. So this is the 45-year chart. Just blow this up. Of the dollar index. So not 3 hours, not 15 minutes, 43 or 45 years, going back into the early 70s. So you can see that, we've had, a giant dollar rally over the last 10 years. And, during this period, the euro dropped from 160 to 102. But to my mind, the dollar, has been coming down in, lower highs. So you can see every time it bounces, the next bounce is lower than the last. So we have this sawtooth triangle. It's called a descending wedge triangle. And I can imagine if we play this out many decades into the future, and this is what's really scary about this thing, is that this is probably what is likely to look like in the US dollar, a full crash of the US dollar. And the fact that we're spending like drunken sailors probably, suggests that that's what's going to happen. But, this is basically about where we are now. You can see that this is a lagging chart. This has dropped substantially since that time. And sorry, let me make sure exactly where the price. So it's about 112. So not too far from. So each chart is a little bit different. So actually, this is about, right around there, because every chart measures the dollar index difference. This one's probably right around there. So right around this support level that we've been, looking at. So this is a lagging chart, and I can well imagine that, you could bounce in here and then eventually go low. But this is what I was looking at, in the peak of the crisis in March, where, we had another, huge upswing in the dollar, and this is where we are. And so it looked on the short-term charts that the dollar was like in a liftoff. It was, going into space, was making new highs, and it was based on my observation of this descending chart that I thought that would be folly to try and chase the dollar rally at that time. And what you'll notice on this long-term chart is that when the dollar picks a direction, it goes in that direction for about 10 years. So this was like 1985 to 1995, 1985 to 1995, 95 to 2000, 2000 to 2010, and then 2010 to 2020. So every one of those cycles lasted about 10 years. So we're in this new dollar decline cycle. And so I can well imagine that this is going to be over the next 10 years that we will see the dollar going in a lower trajectory. So, with that in mind, I feel like, again, the Australian dollar is likely to be one of the strongest currencies. I showed you this inverted head and shoulders yesterday. And, I said any sell-off in the Australian dollar should be bought. And you can see that, we may be at some kind of, a brief resistance here, but I would continue establishing long positions in the Australian dollar. Now, One of the pairs that I talked about yesterday was the euro yen. And this was the email that I sent out not too long ago. Sorry, I'm trying to find it here. This email was a few days ago. It was Sunday, January 17th, so last Sunday. And this was my recommendation to put a sell limit in. Now, I don't typically do limit orders. You know, they're fraught with problems. But in this case, because it came off so dramatically, I figured we'd have a small rally. I try and catch that rally, and you know, and then it would go back into the trend. And it turns out this is what it's looking like right now. But basically, despite whether I won or lost on the trade, and again, this is what Prashant saw, and hopefully that you'll see that whether I win or lose on these trades, I'm not trying to, you know, pump my chest. I am trying to show you what I'm seeing at the time, and whether I win or lose, I try and learn something from that experience on each, you know, you know, trade. So we talked about the governing price patterns that I, you know, saw in the euro yen. So despite the fact that we had this recent momentum, I thought that, you know, we've hit a resistance, and now the euro yen is going to go back into its main dominant trend. So I suggested putting a sell limit at 125.75. I think last night it went to about 136.10 or so, and now we dropped about 100 pips from there. And the position is now starting to make some money. It's about 50, 60 pips in profit. And I said in my analysis, despite the prolific rally, euro yen is in a long-term downtrend. Additionally, a host of several governing bearish price patterns suggest the next major leg in euro yen will be lower. So again, we get caught up in these, you know, momentum, and you lose sight of the big picture. And then when it just swings around, you're not prepared for it. So I try and, you know, there was a hockey event with the great Wayne Gretzky, the greatest hockey player of all time. And I think the lights went out in the stadium or something. So they had to kind of shut the game down for a while they kind of, you know, got everything going. And one of the commentators went down to Wayne Gretzky's box to kind of steal an interview with him. And he goes, "Look, Wayne, you're not the strongest guy out there. You're not the fastest guy out there. You know, what's your secret? Why are you always like ahead of the game? Why are you always, you know, the top scorer and whatnot?" And Wayne Gretzky says, "I don't skate to where the puck is. I skate to where the puck is going to be." Now let that settle in your mind. That to me is one of the most brilliant. It's so simple, and yet I think, especially for trading, that is one of the most brilliant metaphors I could ever think of. So I don't try and skate to where the puck is. I try and skate to where the puck is going to be. And I try and anticipate where the puck is going to be by looking at the preceding patterns or price action. And so this is what, you know, the euro yen is looking like, where it's, you know, looks like it's closing on the low of the day here at 125.34, and I just caught it in the rally at sorry, let me just try and, somebody couldn't see this, so I'm going to try and blow this up better. So how do you guys like that saying? Does that make sense for you? I mean, if you could, you know, skate to where the puck is going to be, don't you think that would really change your trading? So I think what, you know, the way most people are trading is that they're going with the recent momentum, and it's a fear of missing out. So when it's making a new high, they go, "Oh, this is the new momentum. I'm going to chase it up here." And then you wonder why it's down there. And you have no clue of why it went from, you know, one position to the other and sucked you in. You know, how many times have you been sucked into one of these things and go, you know, how did that happen? Well, you know, it came from nowhere. Well, it didn't come from nowhere. A lot of the preceding price action was telling you where it was going to go. So Steve said that's a great analogy. Mick said it's a great analogy. And that, you know, when I saw that, it was like, you know, sometimes you just see something, you just hear something, and it's like makes tingles go up your spine, because it is so brilliant in its simplicity. You know, Steve Jobs, the guy who turned around Apple, always said that elegance is simple. It's just Steve Jobs tried to bring everything down to its most simplest design, most simplest function, most simplest aesthetic. And I don't skate to where the puck is. I skate to where it's going to be. And so, so most people are skating to where the puck is, and Wayne Gretzky is skating to where the puck is going to be. And that's what I try and do in my trading, is trying to anticipate, so when we look at something like this, it's like, the euro yen is really trading, in the middle of where it's been for the last 5 years. So we would say, trading in the middle, so it's got an even chance of going up or down. But if you look at what's been going on here, this has been a stealth bear market. Not even stealth, it has been a bear market where, over the last 5 years, we've dropped from 148 to 125. So it's a downtrend, and then we have all of these preceding what I call governing price patterns. You have the head and shoulders here, and you have the double top here. And this is why when I see something like this, where you say, well, this looks like a double bottom, it looks like a duck, it quacks like a duck, it's probably a duck, so I got to get long this thing. And these are where you can take these counter trend trades, where this showed you there was a double bottom here, and you can get some pretty good liftoff out of these things, but you have to understand, are these the real bottoms? Bottom meaning a bottom, or is it just a fake out? And because of these governing price patterns on top, when I see something like this, I know that it's just not going to last or sustain. Whenever I get in something like this, I go, is this a sustainable double bottom, or is this just one of those things that is going to go into some kind of counter trend trade? And to my mind, it was always the latter, by virtue of the prevailing trend and preceding governing patterns. So sometimes you have to look a couple of years into your rear view mirror to see what is actually going on. And this is why I always say you cannot trade by looking at a 15-minute chart or a 1-hour chart or even a 4-hour chart, because it doesn't give you enough history to be able to see this, double top head and shoulders back in 2014, 7 years ago. So if you can't see that, then you don't know, what you're doing in this time frame. It looks all good in the current time frame, but then all of a sudden, why does it just turn on you? Well, it turned on you because you have all of these bear patterns in the past here, and now it looks like you formed another one. And at the time, I was also saying that in addition to this double top in the current time frame, the recent price pattern looks like you put on this rectangle triangle, this reverse triangle. So you had all of these patterns emerging, and then how prices break out of these patterns start telling you what is likely to go on here. And so I do believe that the yen pairs, consistent with their long-term trends, are going to go lower, meaning that the yen is going to strengthen. So now, for those of you who are somewhat uninitiated to Forex, when I say the yen is going to strengthen, because the yen is in the second position, or what we call the cross position, the euro versus the Japanese yen is likely to go lower. So if I say the yen is going to strengthen, it means the euro versus the Japanese yen is going to go lower. And I do believe we're going to see something like this. And we could just be at the starting point of that new trend. And so, what I suggested in that email was, because we had a pretty good trading range last week, prices usually come back into the trading range. And I thought, so I basically suggested that we put a sell limit right here at 125.75 as it kind of jumped up a little bit, catch that, and then look for it to go down. Now, I typically don't like doing that. I like, catching momentum, meaning I like to put a sell stop under the low, and then it's a no-brainer. When the market just makes, triggers you, then you know where it's going. In terms of a limit order, I never know how much the market is going to retrace and then how much to put a stop loss above that. So I usually don't set up my trading orders that way. I usually set up my orders to capture momentum. But, this is a little bit different. We had a big range. I figured we'd sneak back into the range. And again, this is just my feeling and experience as a trader, knowing how market dynamics kind of play out. So we're in this trade at 125.75. It's now about 40 pips, lower in our favor. Not a lot to write home about, but, we could be looking at something like this and something like that. So Victor says, this makes all so much sense. It does build my confidence, just like you said. Do you ever use leverage in combination with already available stop loss? I'm not quite sure what you mean by that, Victor. So Godwin says, in this chart, do we follow where the red bars are going? So this isn't a question of the color of the bars. It's looking first off is, and maybe I didn't finish this very well, is that, and maybe I should just repeat this, is that there are, 4 phases to, how I look to set up a trade. The first is the observation of a direction, the direction of the market, and I'm just gonna try and direction or phase or condition of the market, or a chart pattern. And in this case, we have, the market is going in, a downward trajectory. And so now we have the beginning, and, I anticipate these patterns before they even happen. So, really a technician would say this is really not a double top until you kind of cross this neckline around 122, and then it's confirmed, and then you look to go. I kind of look at things as they're happening, and I can kind of draw these charts in my sleep by now, because again, I'm looking at stuff over here. I'm not only focusing on this. So I'm anticipating this turn, and then when I see it peaking right here, and then when I see price action, we saw this chart pattern here, and then when we see prices break down underneath all this, then I'll start nibbling at a position way ahead of where most people would say, hey, this is confirmed, the change in direction is there. So I look at the direction, the phase, or the condition of the market. In this case, the long-term secular primary trend is lower. We have all of these precedent chart patterns, these double tops and head and shoulders. Then I wait for what I call my insurance day bar. Insurance day bar. Sorry, man, my writings are just terrible. And to me, the insurance day bar is either a key reversal or an inside bar. A bar, one on top of the other. And so, so this today would be somewhat of an inside bar. It kind of snuck a little bit out, but I'm not going to quibble over technicalities, where you can see that today's range, sorry, this is a weekly bar. So this week's range, if this were the week, you can see it's kind of still within the range of last week. And so what I would do is put a sell stop under it. Now, this is only Wednesday. This bar could be a lot lower by Friday, but and so, let's just say this was the end of the week and this was Friday. So I would look at, my chart pattern, I'd look at the direction, I'd look at the inside bar, and then I would just put an execution strategy that puts a sell stop underneath the low and requires the market to run into me. So the fourth thing is the kind of the trade execution that, I require the market to confirm what I'm looking at. So it's kind of a, the closer you get to the bullseye of a risk reward. So I request, I look at the direction, just to understand what if I'm getting in, the direction of the trend, Then I look for a chart pattern that faces me in the direction of the phase or the condition of the market. Then I look for my insurance day bar, either a key reversal or an inside bar. And then I layer it with a trade execution strategy and put a sell stop underneath the low if I'm looking to sell, or a buy stop above the high if I'm looking to buy. And here, let's just kind of look at my email tonight. I guess I'm trying to cover a lot of stuff in a few sessions, and so I'll blow this chart up. I know it's kind of hard to see on this. So this was my email that went out to my elite traders tonight. This is a stock with the ticker symbol BYND. It's called Beyond Meat. And so I had a sell stop under the lows here, and I'll blow this up and show you what I'm at 134.20. So basically I'm looking at the long-term patterns. We have a double top, head and shoulders. We have these 3 inside bars, which are my insurance day bars. And then I'm looking to put a sell stop underneath the low. And if it goes higher tomorrow, it won't put me in. If it goes lower, it's probably going to be a good trade. And I said basically that the recent rally was a dead cat bounce within a bearish long-term market. The Beyond has traced out a double head and shoulders price patterns on long-term time frames. Penetration below the lows of the last 3 session inside day bars will likely confirm a plunge in the stock. So this is in BYND. And so let me kind of throw this up and show you what I'm looking at. So I'll put it up first off on these long-term, and then I'll reduce it and show you what I'm looking at on kind of a more immediate time frame. It's too big. Okay. So this is ticker symbol BYND. Now, what I'm looking at in this stock is this governing price pattern all the way here, this head and shoulders price pattern, which you can see after that was formed at 150, this thing plunged all the way to 50 bucks. So you could have made a nice bit of money just on the observation of that price pattern. Now, and this kind of looks like the euro yen, where you had the governing price pattern, the head and shoulders, and then you kind of made this double bottom, and you kind of had this rally up here. But to my mind, it's not a sustainable rally. And now you see another governing price pattern start kicking in the form of another head and shoulders. Now you can see that we just nicked the neckline. The neckline is simply a line that confirms this pattern. That last week we kind of nicked the neckline and then just caught a flurry where there was some news that came out, sent the stock higher. But to my mind, this thing is just, this rally is what I call a dead cat bounce. And no offense to pet owners, it's just a saying that means that this thing's not going to bounce very high. It's not going to be sustainable. I think it's a fake out, and that we're going to get a retest of this neckline around the 115. And if we do, we'll probably see the lows again in this stock. So to my mind, I'm looking at these two, head and shoulders tops as being the governing price patterns. And so once I kind of see this, in the long-term prism, then I try and drill it down to shorter time frames to figure out, okay, how can I, get in this thing, on a good risk-reward basis. So this is kind of how I toggle between, longer and shorter time frames. But even this time frame is, a year or so. It's not a 15-minute chart. So this is the chart that I sent out tonight. And again, this is an example of, my layered approach to setting up a high probability risk reward, where, the first thing I look at, is there a direction or a chart pattern? Then if there is a chart pattern that I can identify, then are there what I call my insurance day bars, and then I layer it with an execution strategy. So we can't really see the other head and shoulders in this time frame, but what I'm looking at is the double top here. and a head and shoulders here, where this whole thing looks like a head and shoulders, and would be confirmed by a bust through this neckline, and then that's what I would be expecting. But I'm not going to wait till 115, for this thing to confirm. I think that there's enough evidence here to, put on a nice trade. So you can see right here in the last couple days, what happened was we had this huge bounce on some news. And then in the last 3 days, we've not been able to follow through on those new highs. So lower high there, lower high there, lower high today. And all of these 3 days are inside bars. These are my insurance day bars, where you can see the last 3 days, all of these 3 days, the ranges from high to low all sit within the range of 4 days ago. So, this is what I call a coil. This whole thing is, a market coil. And so kind of the analogy I always make is kind of the beach ball effect, where you put your hand on a beach ball and you suppress it underwater and you push it further, further, further. And then you lift your hand off, what happens? The thing just explodes. So it's that compression of energy. So to me, these 3 days sitting inside the range of that fourth day is compression. And now, to some it would be a guessing game as to which way this compression would, come out of here. But to my mind, the evidence of the previous price pattern suggests that the compression breakout is going to be to the downside. So now, instead of just, shorting at the market, I suggested to our members to put a sell stop under today's low and around, dollar lower than where it is now, about 134.20. And, if tomorrow it opens and it keeps going higher, well, no harm, no foul. But, if the market opens, up $2 and then hits your sell stop, you're likely to be put into a great trade. And so this is how I set up my trades. Not each trade is perfect. Not each trade is going to work. But, on the trades that do, and again, if this does work, this could be a monster trade where, I'm looking first stop 115, next stop $75, which is, half of where we are here. So I think that there could be a budding, good opportunity, in this. So I don't care what the instrument is. So this could be pork bellies, it could be BYND, it could be the euro yen. And this, again, looks very much like the euro yen, where you have, a double bottom that gave some lift, to the euro yen, and then it kicked in, and the major, governing patterns kicked in, and then, to my mind, that's where, this thing's going to go. I don't know that, but it sure, seems like there's a lot of building evidence. And, another thing, whenever something hits a level so many times, it usually revisits it. So now if I was going to take the devil's advocate and say, this is market's going to go higher. In order for a market to go higher, just like I see this market going lower, I see this market going lower because it's built a substantial pattern that suggests that it's going to go lower. And if it's going to go higher, then it should also build a position that says that it's going to go higher. So in this time frame, we did have a double bottom, and it did give you a base to lift off here. But I don't see anything like that here, where, if this thing's going to go, this thing has to go lower, in order to go higher again, and then create some kind of pattern that I can make the case that this thing is going to go higher. And by virtue of the fact that the market has, tested this area infinite many a times. So if a market is good, it'll give you a double bottom, it'll give you a triple bottom, but it won't give you 9 bottoms to get in something that's good. Meaning if this was really good and this is going to, take off, this thing wouldn't have given you 9 chances to get in. And so, it's, again, you won't find this thinking in the textbook. It's just the way markets are. The more time, something bangs at the door, the more it's likely to eventually bang through that door. So that's what I'm looking at. So Mick says, if that goes down, where would you put your emergency stop? So I would put my stop really above, today's high. So, and that's where my stop is. So my sell stop is 134.20. My buy stop is, whatever the high is. Like I don't know what that is. And so this is my risk right here, the difference between here and here, a couple bucks. And this is my reward. So I'll do that all day long. If I can see a 3-to-1 risk reward, in this case, it's a 10-to-1 risk reward, I'll take that trade every day of the week and Sunday. So this is what I try and do. I try and look at patterns and try and then, establish a rationale where I can, set up, a risk reward trade that makes sense. So I have the pattern, then I have the inside bars, then I put my sell stop that requires the market to run into, my order. And then, I have my stop loss, and then that's it. I don't watch it. I go away, and I could be in this trade for 3 months or 6 months. Once my stop is triggered, and if this thing starts making its way down here and starts, telling me that I'm on the right way, then guess what? I'm going to keep adding to my position and building a position so that when it is down here, I'm going to make a monster amount of money. And this is how, I make big money in the markets. I build positions in things that make sense. And then when the market tells me that it makes sense, I ramp up my positions and, away we go. So Deborah says, is this a daily chart? It is, because these are daily bars. So what you're seeing is each one of these bars is a daily bar. Let me try and get rid of some of this distraction. So a couple days ago, we got to, high of like 142. And then each day it's kind of just been ratcheting down. It hasn't been able to follow through. So these are daily bars where these 3 arrows are. These are the daily price action. And these are what I call inside bars, because each one of the last 3 days, the trading range from high to low sits within the trading range 4 days ago. So these are inside. So this is a coil. And what this says is that this got tired. In the last 4 days, this hasn't shown any ability to take out that high 4 days ago. And so it's tiring, and it's just looking like it's going to roll over. And, the preceding pattern tells me that this could roll over very quickly. If traders get disillusioned and, think whatever they were chasing up here is going to change, they want to get out. And, so this is how, again, Wayne Gretzky is looking at the puck down here. He's not chasing it up here because, he saw this pattern here, if you get the metaphor. So this is what I try and do. I try and anticipate where the puck is going to be by virtue of the patterns. And I try not to be sucked in by, the last 15 minutes of, trading action here. So Deb says, could you explain how to build a position? So yeah, so basically, I want, here would be my first sell stop. So then, I want to see how the market speaks to me. Does the market respond? Do I even get, in here, or does it open tomorrow and keep going higher? And then I go, well, I'm just not on the right trail here, and go and look at something else. But if on the other hand, the market kind of drops through here, and this is what it looks like tomorrow, then, I'm going to just look for, my next position where, let's say we get a little inside bar here, where it drops, then we get a little thing where it stops. Then I would put, another sell position underneath, this little inside bar here. And then if we get to the neckline, kind of just do a little thing, then I'll put another trade underneath here in anticipation that the next time it breaks through this thing, it's going to break through here. So that's how you make a lot of money in the markets. So I guess now I'll take a few questions from our elite traders, and then I'll turn it over to you guys. So, I don't really come in here with any set idea of what I want to talk to you about. I'm just looking at the markets and trading, based on what I'm seeing in the live markets. Oh, I did want to, let me just reference this trade that I talked about yesterday. So this is the pound New Zealand, where, I thought based on the recent breakout and pattern that we might go higher, but I said that it was likely going to be, messy, that it wasn't going to go straight up by virtue of the fact that, we had such a prolific downtrend. The markets just don't turn on a dime. And this is also kind of to the point of what I told you yesterday, that I don't just trade these reversals in a vacuum. I don't just see a huge key reversal and say, I'm gonna, see this. So what I'm speaking about is today we had this huge key reversal, made a new high, closed on the low of the day. Now, if you just see that, you say, well, I'm going to get short, and just look for that. And that may happen. This is still a downtrend, but I'm starting to feel that we snuck under the neckline here, and then just like the dollar index, this is setting up for a bear trap, where we snuck just below that index, and now we've come back above that. So and I'm also looking at this in terms of the weekly chart going way back, and I still feel that this will find a way to go higher. So we're at an inflection point. I can freely admit that I'm open to the pound New Zealand going up or down at this point. I do feel that we've put this double bottom in here, and that we will find a way to go higher. But I think, again, I was pretty clear yesterday that there's an aesthetic to these charts. And when something, comes down as hard and as quickly as the pound New Zealand, it doesn't just go straight up against that. There's going to be, and I said, even if we break out here, we're likely to retest this thing. And, so this thing needs to build some space before it can find a way to go up, if that's the way it's going to go. Now, I may be completely wrong about this. I did get long, and I'm still long, despite the fact that we reversed badly today. And like I said, I was, completely, anticipating that, we would have some ebbs and flows in here. And, let's see how this plays out. But, we do have this reversal. And, like I said, I always, do a visualization, say, okay, let's say, this is a reversal and I'm thinking of this, going down. Then I try and draw in my mind kind of, price action. If I shorted this thing, can I see prices just, going straight down like here? Can I see it kind of, cutting through all of this price action and this history here? So, markets usually, they try and create some separation before they fall. So this, kind of goes down, it builds away until so it can fall again. So it creates some separation, before it can, go down again. So the market kind of needs to build energy before it does that. So I always kind of look where the obstruction is, and if a market can just fall or go higher without any price history in its way. And if I was looking to short this, let's say tonight I see this key reversal, I'm all excited, I want to short this thing. Can I make the case? Can I visualize in my mind, that this market is going to, just cut through all of this thing and go through here? I think it'd be very difficult. So I still feel that, we're going to grab a foothold in here and go that way. So let's see by the end of the week if I'm right or wrong. Again, this business is not about being right or wrong. So I like, let's put it this way, I like, that chart of Beyond Meat, the risk reward, a little bit better than this, but I can still feel that this is a double bottom and this will play out in my favor. Somehow when we see these things, the market finds a way to, get going. But I could, kind of make the case for this either way, where Beyond Meat, I have very little ambivalence of what I'm looking at there. So I just wanted to kind of circle back and talk about that. All right, so there were some questions last night. Let's see. So Kenny says, I can't figure out how much a pip is worth. So yesterday I talked to you about, setups, where sometimes I risk, 80 pips or 120 pips. On this, I wanted to give this thing a lot of room to trade. So I gave this thing a lot of room to trade. I gave it like 150 pips. And, again, people say, well, I can't, give that much as much room, and my retort was, yeah, if you trade with your normal position size, you can. So what I'm going to do is give you a position size calculator. And so this will give you a way to figure out exactly how to set up your trades. I'm just going to put this in the chat box so you don't have to scratch it down. I'll also put it in the webinar. And this is the position size calculator that will help you with your risk management, which is the most fundamental part of trading. Like I said, it's not about entry, where you get in, how you get in. It's about discipline and risk management. So the neat thing about this calculator is that you can use it just about anywhere in the world, these major currencies. So for purposes of this, I'm just going to assume a US dollar account. Let's assume a small account size, $2,000. And then I typically advise our members to risk 0.5% on the average trade. So 0.5% is expressed 0.5. Now, if you want to go a little higher, do 1.5, or you want to do 1.5%, anywhere is reasonable. If you're taking 3-5% risk per trade, then 10 trades would pretty much wipe you out pretty quickly. So if you take 0.5% risk, there's almost no chance that you're going to get wiped out. So I talked about a statistic yesterday where 90% of people are getting blown out in 3 months. If you take 0.5% risk on a trade, you would have to lose 200 straight trades, to get wiped out. And that would be quite a feat, an accomplishment. And if you did that, then you don't have an edge in the market and you shouldn't be trading. And so this basically tells you how to set up your trade. So even if I gave you a pound New Zealand trade with 187 pips, I mean, that's just a huge amount of pips. And you would say, ordinarily, I can't take that amount of risk. But it doesn't matter because you're specifying your risk percentage here. So everyone, makes the, mistaken thing that if, I just risk 10 or 15 pips, I'm being a good boy. But if your position size is so huge on that 10 or 15 pips, it doesn't really matter. If you're risking 3 or 5%, risking 10 or 15%, 15 pips, then your position size is too big. So now there's different ways of expressing contract size. This is a normal lot, a $100,000 lot. This would be a mini lot, which would be 10,000, and this would be a micro lot, which would be a contract size of 1,000. So let's say your $2,000 account, you're using a mini lot, and now you go to the pound New Zealand, you find out where this thing is, and you hit the calculate button. This tells you you can do 0.075 lots in your $2,000 account and take 187 pip risk. And even if you get whacked out, let's say, Mark's a lunatic, he went long pound New Zealand, you led me like a fish in the water, and I got massacred on 187 pips, but I only took 0.5% risk. Guess what? You only lost $10 of your $2,000 account, and you live to fight another day. So I advise you to use this risk calculator, this position size calculator, on all your trades. So Kenny, if you want to know how much a pip is, you would come up here, go to Forex calculators, and go to pip calculator. And this will tell you the value of a pip. So you come here, you put your account trade size, 10,000, and this will tell you, based on a micro lot, a mini lot, and a standard lot, what the value of a pip in Australian Canadian is $7.90. So I'll also put this in the chat box. So hopefully, Kenny, that answers your question. And let me put it in here also. You're welcome, Kenny. So that's how it tells you the value of a pip. So, every pair is different. The euro and the Australian dollar is $10, but this tells you the value of all your pips of all your currency pairs. So I put those links in your chat box there. So there were some other questions here, and then I'll answer yours. So the elite members, this is part of our daily list. I played you a video. If you want to become part of our elite member, I'll do the same tonight. Let's see. Andrew says, I'd like to ask you how you feel about the euro pound. Also, if you could comment on Tesla. So the euro pound is, kind of a difficult currency. Don't really trade it a lot unless I see kind of a clear way that I can get in or out. That applies just about to anything. Yeah, you can see that it's been, ambiguous, although this is starting to look heavy, meaning that it's, starting to favor the downside. But to my mind, there's some ambiguity here. And while I can see the short-term trend lower, I'm not quite sure what, this thing wants to do. So again, stepping back at the big picture, the way I assess this chart is that this is the governing pattern right here. This double bottom, this is even a triple bottom. You could also even call this a rectangle bottom. Either way, there's many patterns here that's with the word bottom in it, which suggests that this is, a market that's going to go up over time. So I do expect that the euro pound to go higher over time. You can see that we have this double bottom right here, but it's starting to look, heavy in this thing where the next direction does seem like it favors the downside. So I don't know. It looks short term like it should be under pressure, long term like it should go up. All in all, it's not really a sexy chart that I like to play around in. Like I said, I try and get in things like Beyond Meat, where if I get in at 135, and this thing goes to $90, I can make a ton of dough. I don't like to, fart around, in a market that's going up and down 50 pips, every 6 months. So, this kind of looks like it's heavy here. It's got some resistance, but the longer term trend suggests that it's, I don't know. You could put a gun to my head. I could probably, come out with a rationalization either way. Either way, it's a very muddled chart. You can see that there's just a lot of price history, in a very confined trading zone. And so, unless I see something clear, I'd be inclined to stay away from it. Although, like I said, if you put a gun to my head, I think there's short-term pressure. This thing looks like, it's going to go lower. In terms of Tesla stock, obviously been a runaway train. And, tough to get in front of this thing right now, meaning that I wouldn't just willy-nilly, short it. So I can see that we've got a bit of a small symmetrical triangle forming up here, which could just, provide the breakout for another leg up here. You can see that there was a symmetrical triangle right here. So what I try and do is, like I said, I first try and identify, is something, in an up market or a down market? So clearly this is in an up market. So when it's in an up market, I try and find different ways to identify where to, get in something. So when it breaks out of a symmetrical triangle, like it did here, you get long. Or you see these two key reversals here, where it made a new low, close on the high, made a new low, close on the high. Both of those were pointing. So I just look at patterns and price action to get myself in the direction of the trend. And, if this thing is going to end and it's a short, it will end the same way it started. There should be some pattern that tells us when this is going to end, where this, breaks up and then it starts, doing something, and then we see it in head and shoulders, and, we see something where it's going to, go the other way. But, The one thing I would say, just like with pound New Zealand, the fact that this thing has gone up so parabolic, the market's just not going to come straight down like that. It may, I mean, if there was some kind of bubble, but normally, I would look for something where I saw the key reversal. Hopefully you create some distance away from, the up move where you build away, you create a pattern, and now you can find something else to, so I think in 8 days, I think Apple, Boeing, and Tesla will be announcing their earnings. So that's either going to be the top of the market or, the continuation of this. So right now, the ride is still higher. But like I said, this is a stock market. This is not a stock market. It's a market of stocks. Some are going higher, some are going lower. One of the stocks that I've been shorting recently is a recent IPO that Warren Buffett's in. I was kind of telling somebody, about this, and they go, well, you can't short it because Warren Buffett's in it. And I go, well, again, I don't trade like that. I just trade based on price action. And I've been shorting this. This is Snow. It's a cloud company. It just recently went public, so it's got very limited price history. But based on the limited price history, what I'm looking at is this guy right here. This double top looking thing. Well, you broke into here. Now you kind of got, another double top looking here. And so, you kind of have the neckline right around where we are. We've crashed through this. 270 would be the next one. And so this doesn't have a lot of price history, but, this suggests that, we're going to, go lower here. So I've just been shorting this thing. I started shorting it. So this is, again, what I look for is I look for a pattern. So here was my pattern. I saw this double top. Then, I see this price action. So again, this is like Wayne Gretzky. Wayne Gretzky's not skating to where the puck is. He's skating to where the puck is going to be. So when I see a double top like this over here, I then short into, so you can see once it went up here, it made a new high and closed on the low, a key reversal. And then it came right back in here. And so when it made a new high, close on the low. So the next day, when this thing opens higher, so after closing on the low, you can see that this day it opened lower. I just shorted into that. This is around 307 or something like that. I started shorting it because, I was looking at all the prior price action. And even if I was wrong, I was saying, okay, here's my risk. If I short it here, my risk is right here. So this is my risk, and that's potentially my reward. So again, if I can make the case for a 2-to-1, 3-to-1, 4-to-1 risk reward, I'm going to do that trade all day long. So I just feel that this thing is looking nasty right off the bat, and it just looks like it's going to go lower. So I've been short SNOW for the last couple of days. So let me take a few more questions. And so Byron says, do you short or buy puts? So I buy call options. I buy put options. I kind of like spitball to determine, the value of that based on, how fast something is going to come out of it. So I would definitely buy puts on BYND. I definitely buy puts on this thing. This thing a little bit, I like BYND because I'm speculating that thing, if that was a dead cat bound, it should fail and fail very quickly. So I was looking at the puts last night in BYND, and I am short the stock. So you guys are asking me to, to look at all these other trading instruments. This really isn't, about kind of going through all the charts and whatnot. I just want to kind of share with you, my analysis and what I'm thinking. The Master Pattern Trader is where I go through all of these charts, individually, spend 2 hours kind of going through it. So I just kind of want to give you an example of what, I'm looking at and how I do it. Walter, thank you. Thank you for that. Walter says, I wish you best for your doctor's appointment. So thank you. Do I still look at crypto markets? I look at everything. I get the feeling that Bitcoin, if you didn't make the money, probably should get out. I get the feeling that this thing is kind of topping at this 41,000. And, when something like this, like BYND or whatever, where you start getting failure at a certain price, it could turn on you very quickly and turn ugly very quickly. So this is a very speculative instrument. Who's to say what's to happen here? So you can see that, we've got a bit of resistance right here at this 41,000. It feels like this is getting somewhat toppy in here. And, if we start trading through 30,000, then you might want to look out below. But I get the feeling that, after 1,000% rise, that it's probably it for now. I could be dead wrong. Rod says, how far out do you buy your puts and calls? It really depends on what I'm looking at. So for BYND, I might look out several weeks, because if I'm right, I think that this is going to fall over, a substantial time frame. So just for something like that, I start looking out, and try and find some cheap play where I can buy, maybe the 120 puts, a month or two out, and I'm probably going to start piling up on something like that. Artona says, how do you see pound yen? So as I said, I am pretty hesitant. I kind of feel like these yen trades, they're going to turn lower. The pound yen I talked about yesterday is in this kind of upward momentum for now. But, I've always been fearful about getting, caught with my pants down and, having the last, running out of chairs at a, musical. So we've been kind of creeping upwards in the pound yen, but based on the long-term things, I always expect this downtrend to, kick in. We have this key reversal yesterday or today. Like I said, I wouldn't trade all key reversals the same, but let's see how, we dance around that reversal. The path of least resistance still seems higher in pound yen. It still feels like maybe you could make one more attempt up here before it kicks in, and maybe not. So, we're trading within kind of this ascending triangle where you've kind of been. So I would, watch this area carefully. Yeah, a little less definitive about this than I am, say, euro yen. Euro yen looks more bearish than this does. So, and so does US dollar versus yen. So this is the dollar versus the yen on a daily and weekly. I've been saying that there's nowhere for this chart to go but lower. It's just nowhere for this thing to hide. There's almost no way for this thing to rally. Now, having said that, it's required a lot of patience of late to stay in it, but there's almost no risk to being short here. I can't, draw any scenario where I could see dollar yen going higher. And even if it did, I would just short more. So this is a chart where, in every time frame, if you looked at it in any textbook, you have every bear price pattern. So you have the double top here, you have the head and shoulders. So as I said last night, this has been my governing pattern for years. You saw how I made 600 grand looking at a double top here because the main trend is lower. So I look at, for patterns within the trend and, let the market do the work for you. And so it's been much more difficult recently. You've been kind of going 3 steps forward, 2 backwards, but, we have been, going lower. Since you saw in that March email that the dollar yen was around 108, And I said, there's nowhere to go but lower. We're 500 pips lower from where we are. And 6 months from now, we'll probably be 500 pips lower than where we are today. So within this descending triangle, you can see that we had this double top here. You kind of had this head and shoulders. And this is the same explanation that I was giving for BYND. Whenever you have something hit one level so many times, it's just not possible now, to make a case for this thing to make a sustainable rally. In order to come from a sustainable rally, you have to have a pattern where it comes from. Inverted head and shoulders, a double bottom, a triple bottom. I've never heard of a 9 bottom bottom. So, there's just nowhere for this to go but lower. How it gets there, where, when it gets there, that I can't tell you, but it is going lower. And so this is kind of the obstruction that has been in the way for, dollar yen, because right under these prices, you can see where it kind of snuck under there, there is some price history here. So what it has to do is just kind of build away, so that it can fall without running into the prior obstruction. So dollar yen is going to go lower. So I do expect these yen pairs to go lower. And I do expect pound yen to eventually go lower, but it could have one more burst before it kind of succumbs to the long-term trend. So that's why I'm focusing on the euro yen right now. So Johannes asked, if I join the elite program, do I have to have a certain account balance? And, frankly, Johannes, the purpose of the elite program, as all of this, is to inform, instruct, and educate you. And so you have to determine what the price of knowledge is. So I wouldn't, I think a lot of people, and this sounds very fulfilling, make an assessment of the elite program based on their account balance and say, well, if the elite program costs this much and I only have this, then I can't really justify it. But the thing that I would, put back to you, and only you can answer, what is the price of knowledge, right? So there's an old saying, teach a man to fish for a day and he'll eat for a day. I'm sorry, give a man a fish and he'll eat for the day. Teach a man to fish and he'll eat for a lifetime. So, what is the value of, information? What is the value of, knowing that, getting in right here would yield you, hundreds of thousands of dollars one day. So only you can determine that, Johannes. So I would not equate how much is in your account right now to the elite program, but that's obviously entirely up to you. Frank says, I'm not in the US and don't trade US stocks. Is there an elite program just for FX? So Frank, my program is pretty much tilted to FX trades. But I try and offer a balance of gold and oil and stocks and different things. And again, what I'm trying to demonstrate is that you can look at whether this be the chart of the euro versus the yen, or if this said IBM. It's really getting to understand the knowledge of price action, how it works, and so it really shouldn't matter the instrument, even if you don't trade it. To see what I'm looking at, why I'm looking at it. Hopefully that informs you so that when you see that same pattern, on this, it may correlate to, the Swiss versus the euro. So Godwin says, you're giving us very good value indeed. Thank you. So Mustafa says, the elite program gives you power and confidence. So again, I wish people could see each other's comments on this. It's the shortcoming of this program. And so Mustafa, thank you for that. Kevin says, can you explain how you decide what strike price is? It really depends on, what you're looking at in the chart. And so with Beyond Meat, we're trading at 135. I could see it trading back to that neckline if it's really a robust, if this thing really is going to move, so that was about 115. So that's $20 away. So you could, pick a strike price 20, $10 from here, or even 15, a month or two in the future. So again, it's some of it is a judgment call about, how fertile you believe an opportunity is. And for options, you have to, not only see the opportunity, but see that something's going to work out, in a particular time period. So if you're a novice, perhaps you shouldn't play around with them. And obviously know that with options, you can lose 100% of whatever you invest. But the nice thing about options is that your loss is limited to what you invest. Whereas if you go short beyond, your loss is theoretically unlimited. Jason, thank you very much. Let's see. Mustafa want to know about the gold price action. So with the weakening dollar, I do expect that, gold will likely go higher. So this is the weekly chart of XAU USD spot gold. Let me just blow this up, and then I'll leave it here. So it's my premise that, everything begins with a price pattern. So you don't have to follow the news. You don't have to, the market, sets out a price pattern before it goes in a certain direction. And so what I'm alluding to here, this is the weekly price action of XAU USD. And all the way back in 2015, we see this double bottom at the 1,050. And then we see a set of what I call complex inverted head and shoulders, where there's a number of shoulders at the same level. So we have a double bottom and an inverted head and shoulders. And it was all joined by this neckline, that took place over about 6 years at around the 1360 to 1380 level. So when we bust this neckline right here around 1360 last July, that was your green light, to, this kind of move. It didn't just come out of nowhere. Yes, there was the pandemic, but you had, 5-7 years prior to the pandemic of this price pattern building. And so if you observe these long-term price patterns, you can get and jump aboard these trends that can change your life. So here we have now this breakout of this long-term price trend. And with this double bottom inverted head and shoulders, this implies that this is going to be, bull market for over, for a long period of time. And then the question is, a question of timing. How do you get in? How do you time it? I actually started alerting our members to start bailing out here after I saw the volatility start picking up. And what I mean by volatility is you can see these 3 weekly bars started to expand dramatically above the volatility we had in prior sessions, and actually made a ton of money, shorting the market. I think I had one of these trades to show you here today. So this was the descending pattern that I saw not too long ago. It was middle of November. I sent out this email to those on my elite list to sell short at 1875 based on my observation of the descending triangle, the inside day bar, and then the execution order, the sell stop underneath there. And I said, gold has been trading within the cadence of a descending triangle. A descending triangle is a neutral price pattern, meaning that prices could break out either way. I said, because gold has, retested the price of 1850 multiple times, and this is what I was trying to say to you, that bottoms just don't get made when you hit something 19 times. I said, in this case, gold has retested the low price of 1850 multiple times, suggesting the next major breakout will be to the downside. And I had a take profit of 1817, which was some 600 pips lower than that. And, I made a nice little bundle in just a few days as gold broke out of this 1875, hit my take profit at 1817, and I made, some nice coin on that trade. But that was then, and this is now. So, I was kind of looking, at gold in this time frame right here, and suspecting that the next breakout would be down here. Got out of my trade, made a nice bit of money, and now, I've been looking at gold, and now I can see these two key reversals, where again, a key reversal is where, made a new low, close on the high. And this week we're doing the same, made a new low, close on the high. And very often these reversals point in the direction that they want to go. So now, because this is, broken out of a bull price pattern, and you have this bullish trend, now you want to look how to get, in sync with the trend. And so you kind of have this combination here where you have this double bottom, and you have this key reversal price action, made a new low, close on the high. So I look at, both the price pattern and the price action within it. And now you have, what appears to be very bullish price action. So you can wait for this week to close, wait for Friday, and then put your buy stop, above the high of the weekly bar to get in sync with this gold trend. You can see that, we also have what appears to be, a bit of a trend line here. Now, I thought that there was a possibility gold could, trade back to 1700. I was looking at, kind of this ascending, broadening price pattern, but gold is dug in, and it appears now that, it's telling us that it wants to go back in the direction of the major trend. So I was thinking we may pull back somewhere to 1750 or so before we got going again. That could be the case, but it certainly looks now that, gold is telling us by virtue of this double bottom, this key reversal, that it's ready to get going in the direction of the underlying trend. So with that said, yesterday I played a video for those who would like to know a little bit more information about my Elite Daily email program. I'm going to replay that. If you watch it yesterday, you don't have to watch it again. And for those of you who, opt out, I will see you back tomorrow at 7 p.m. Eastern Standard Time, where we'll check out some new trades. So once again, want to thank you guys for showing up, and look forward to seeing all of you guys back tomorrow. What I'm about to reveal has to be the quickest and easiest way to execute scientific-based trading strategies in the world today. There's no need to scratch your head in frustration, guessing your way to halfway there, because I've already created the ideal solution for you. Now I'm going to introduce you to my daily journal. On a real basic level, it is a daily email that I send to my inner circle of traders. This email contains the exact trades I'm looking at, where to enter, where to exit, and how much to risk on any given trade. This radically simple yet effective system of delivering scientifically tested trading results will work for you even if you are completely new to trading, or you have years of experience as a struggling trader, or you don't have a computer. A phone is all that is needed these days. Before I show you what these emails look like, I first need to tell you what this service is not. This service is not a get-rich-quick scheme. Real results take time. You're not going to become a millionaire overnight. To get scientific studies, you need to execute this strategy with scientific consistency. If you're not fully committed, then this won't work for you. If you're going to jump from the next shiny object as soon as a marketing guy sends you an email or posts something on Facebook, then this system is also not going to be for you. This is for men and women who are ready to stop looking for miracles, like Mike, who had this to say on Facebook. I don't know if Mark Shawson realizes the huge impact he is having on some of our lives. I've gone from working 12-hour days in oil to sitting in front of my PC at home for a couple of hours a day, placing trades and learning from his journals. I am now planning to go traveling too and can trade from my laptop along the way.
This has been a truly life-changing experience. Or like Andy, who wrote me an email saying, "Hi Mark, just a quick thank you. Last week I lost 51% of my trades, but still returned a profit of 1,265 and 26 British pounds. And that was multiplied by two, as I have three accounts, one for myself, one for my son, and another for my wife. So I grossed over 3,800 pounds in 1 week over three accounts using the methods you are teaching. Keep up the good work. Best regards, Andy." Andy actually attached a screenshot of the first account he mentioned in his email. I literally have hundreds upon hundreds of emails, comments, and reviews just like this about my daily email service. So let me break down exactly how it works. Every day, from Sunday to Thursday, you'll get an email from me with instructions on what to do. The email looks like this. You get an image of the chart with the analysis drawn on it so you know exactly why I'm entering the trade. Each of the patterns I draw on this chart will have been scientifically tested. You get the exact entry and exit points so that you can enter the trade without guesswork and do it quickly. You also get a brief analytical breakdown. These small, digestible chunks of information help you retain the reason why I enter trades, and it teaches you while you make money. I call this daily email service the Pattern Trader Elite, and you've no doubt noticed that the Pattern Trader Elite is, without question, the most efficient service there is. And that gives you the freedom to experience a scientifically tested trading strategy without needing to spend months or years learning it for yourself. And as any Pattern Trader Elite member will tell you, the results are off the charts. Pun intended. In fact, a woman called Marta sent me the following email. She said, "Dear Mark, I'm doing really well. Yes, the last 2 weeks I have made $15,000 on your recent trades in gold, Australian dollar versus US dollar versus Japanese yen, pound versus Japanese yen, and I do like the Dow Jones Industrials. Thank you, you are a gem, Marta." Now, before I reveal exactly how to sign up to become a Pattern Trader Elite member, I'd like to throw in a few bonuses. The first free gift you'll be receiving is the Pattern Trader Advisory. Every single week, I'll send you a 15 to 30-minute video analysis of the markets. This will give you hands-on training so that you can really accelerate your learning even faster. One of my members, Chris, wrote to me recently telling me how much he's enjoyed the education part of this service. "Hi Mark, I doubt you will read this, but in case you do, I just wanted to say thank you. I have focused my time on learning the principles of your trading strategy as I feel the education is of most importance to me. I've made 3 trades this week. One, your recommendation on XAU USD, which is spot gold, and the other 2 on my own in oil and the dollar versus the Japanese yen. Oil has dropped out of the sky nearly 500 pips in 1 week, and the dollar yen just started with momentum on the downside. I'm on holiday with the family, which has added to a very enjoyable week. Kind regards, Chris." On our website right now, the Pattern Trader Advisory is $200 per year, and it'll be thrown in with the entire bundle of packages for free. The next bonus I'm going to give you is called the Master Pattern Trader. You'll get a live 1 to 2 hour session with me every single Friday. That's over 45 live sessions within the next 12 months in a group environment. Here you get to watch how I go through the markets, then you can ask questions and discover exactly what I believe is going to happen next. On the website right now, the Master Pattern Trader is $997, which I consider to be underpriced since it comes out to be less than $3 per day. However, here's the bad news. This service is very exclusive. It is not for everyone, which is why I don't just have a buy now button below this video. In order to get into this program, you have to do something a little bit unconventional. I'm running a little experiment where I'm offering people a huge discount. If you'd like to be part of the Pattern Trader Elite service, send an email over to markschausenelite@gmail.com with the subject line, "Let's do this." I'll send you a detailed summary of exactly what this program is all about, and you just tell me if I should save you a spot or not. I don't want to make this publicly available. First, make sure you copy the address below and email me at markshausenelite@gmail.com. And then in the subject line, just put, "Let's do this." When you do that, you've taken the first step to joining hundreds of other highly successful traders. We've had many interviews with people who transformed themselves from ordinary people to elite traders. Here's just a small snippet of what they had to say.
Damn it, I'm gonna learn this and I'm gonna figure it out. I finally got angry and said, you know what? I'm gonna figure it out.
You know, for me, it comes down to trust. I really trust what he does, and I follow him, and what he's saying is, you know, accurate. I'm really big on details, and he has the details in there.
And I must say that with every winning trade, it just confirmed my belief in his method. That the way he reasons it, the trade, is actually correct.
Mark is a genuine, sincere, caring individual who cares about his members. He is as smart as any Forex trader that I have ever met.
And it has actually helped me being more secure and be more calm about my trading. Good. And about my, I've heard that before also from others, and I would just repeat this, or repeat that. He makes me calm, When I actually do trading, I'm not so scared anymore,
And I do think that y'all's program is definitely the key to that end result.
You follow Mark for a little bit of time and you listen, you see he's truly genuine and he's the real deal. He's not full of it. He's not just, oh, I'm boasting. Hey, look what I made this time around. No, it's A, B, and C is going to get you to D, E, and F.
So let's talk results then. So where are you at right now? So where's your account? You're in the black. How much has your account grown over the last, let's say, year?
So I think based on the screenshot I gave you, it was like about 70 grand CHF. It's still hovering around that level. Essentially what I've done is I withdrew the principal investment that I put in. So basically all that money that is in the account right now is actually the profits that I've gained.
I think I picked up probably 852 pips on it, When you don't have a large trading account and you're trading standard lots, they're worth $10. Pip is worth $10. So 852 pips in one trade is quite a financial gain.
That's what he actually brings, I think, to many, the calmness, don't worry, believe what you're doing and just and analyze it, and the way I do, and see if it works. And we must say, his results, are also showing that it works. So that's fine. I think that's great, and I'm looking forward to even work even more with him.
I just follow what Mark has laid out, exactly for a while, and make sure you see how it works, because it does work. That's the way to go.
There's a better way, and an easier way, and I think that's what resonates mostly with me. A much better way, much less stress, and the proof is in the pudding with Mark.
If there's anyone out there who's lost a huge sum of money or is down in his luck, and he needs something like a lifeline, to turn his life around, anyone can do that. Anyone. So it represents a lifeline, hope for anyone who's willing to learn and to apply his methods.
I like his recommendations. I like having a safety net. I like having someone to listen to, because there's always somebody smarter than yourself. I'm not the sharpest knife in the drawer, but when I follow somebody who I consider to be extremely knowledgeable and extremely trustworthy, I'm going to stick with them. And that's what I found in Mark.
And I do think that y'all's program is definitely the key to that end result.
If you're ready to join, then send an email over to markshausenelite@gmail.com with the subject line, "Let's do this." I hope you've enjoyed watching this presentation half as much as I enjoyed making it. I'll see you on the other side.